Good evening and welcome to the Trading the Tech Show. My name is Derek and this is iLi Academy. Today is Monday, December 7th. So it's been an interesting day in the markets. Um, Quite a bit of movement today. Um, so quite happy with what I was seeing there. Um, it's just uh, volatile. So that volatility does help us to gather some pips. So it's good. It's definitely good when there's volatility in the market. We want to see movement for sure. So tonight we're gonna look at our charts and see what's. Excuse me, there I had to sneeze there. Tonight we're gonna look at our charts and see what uh, what's kind of happened so far since last night, and then we'll take a look and see where we can go from here. Sorry about that, just had to sneeze. uh, I did add a couple of new things to the website. I mentioned this on the daily market overview show this morning, but I want to mention it here too if you didn't watch that show. This new tab here is like the Forex web charts. It's actually a charting software from TradingView that you can use right on the website, or you can access right from the website. We have Forex ratings, which is basically looking at the analyst ratings for each of the pairs, telling you whether it's a buy rating or a sell rating, and how many analysts are on either side or if they're neutral. Then we've got a Forex screener that's kind of giving you, you can actually set whatever parameters you want on there, according to the software itself to see, is it like a 1 month high or 1 month low, or you can set it to, lots of parameters. There's just lots of parameters that you can actually set above a certain price or below a certain price, or I guess percentage of movement or that type of thing. And it'll screen those pairs for you, according to a strategy. So you can say, okay, I want to see only when pairs are above the 720 EMA. When they cross above the 720 EMA, I want to get an alert type thing. You can set that up. So it has the screener, and then we also have the market data as well. So this will give you data on the indices, like the FTSE or the Nikkei index or the Dow Jones, or the S&P 500. All those are added there, and there can be more that are added as well. Commodities, future, the whole thing is there. Forex, all of that is there for the market data. So that's another place. So not even going to show you. If you're interested, go take a look at it. But it is a new tab that we've added here. And TradingView is a platform that you've seen a lot, probably online if you've been online looking at different individuals who trade, or you watch trading videos. A lot of people are using this particular software. So there is a free tier for the software. So that's basically what I've got now until I decide, if I want to use it at a deeper level. I think that I will, because there's some APIs, basically where you can interface things and the data and all that stuff. So I may actually go ahead and subscribe to it, because there's some alerts that you can set on there, like when the pairs pass above, say, or maybe they dip below the 50 EMA or below the 100 EMA. You can set it up where it's going to send you an alert, and that can be either through email, or it can come to your phone, I think through SMS too, that type of thing. So I think that's cool to have, especially for manual traders, because then you don't have to worry about missing those movements. If it drops below the 50 EMA, or below the 100 EMA, then you automatically know, okay, this pair, I can go look and see if there's a setup for us, when it's moving either below or above. So we can kind of set that from, and we have directions. So we know what direction the 720 telling us we should trade in, right? So if we're above the 720, we know that we're buyers. If it's below the 720, if rates below the 720, then we know that we're sellers. So we can look and say, okay, anytime, say we're below the 720, that the rate is below the 720 EMA. So we can actually say, okay, when, we would only be interested in selling when the rate then goes above the 50, right? As long as the 50 is below the 720, that's our pullback area, right? So it's pulled back to the 50, it's pulling back to the 100. Once that happens, it can alert us, and then we know to go look at the, that pair and see if we want to place our order on one of those moving averages. So it's something that can alert you so that you don't miss those opportunities, or at least it can, hip you to the fact that, hey, it went over the 50 or it went over the 100. So maybe there's an opportunity for me to place an order here. So just that alerting function right there is great, and for, and with the software though, if you're on the free tier, you only get one alert, I believe. But if you're on like a paid tier, there's more. So I haven't figured out if it's just the first paid tier or what that gives you a number of alerts. I think it may be up to 100 or something on the first paid tier, 100 different alerts that you can set. And I think that's more than enough for us. We've got what, 25 pairs. So if we're looking for something specific, we can set that up as an alert. We don't need an alert for every single thing. We just need some alert that's going to kind of give us an idea when maybe our setup might be happening. So I think I think it's a great tool, and it's something that's going to be around a while. It's something that I've seen for a long time. It's something that's very, very popular. I don't think it's going anywhere. So like I said, when I like to recommend anything software wise or anything like that that's not in-house, I like it to be something I don't feel like is going to disappear on us, because there are companies that kind of come and go, or products that kind of come and go, and that kind of screws you over because you feel like, okay, I'm introducing this product to people, and then all of a sudden it disappears, and it's kind of like that void is left. If you don't have anything to fill it with, people kind of, it's not your fault, but at the same time, people kind of get used to using it, and they kind of wonder why, there's nothing to fill it. So hopefully we'll be able to, have you guys use that as well in concert with your MT4. MT4 has alerting too, but this may just be another avenue for you to do it. It may do something maybe that your MT4 does not. I'm not real super familiar with it yet. I've just been starting to use it, but as I use it and as I learn it or so, I'll be showing you guys things on it as well, and maybe even integrate it into some of the show as we go. Matter of fact, let me go over there now. I'm going to go to the Forex web charts. I'll go ahead and show you that. Just bear with me 1 minute. I'm going to bring that page up, and as that comes up, I'm going to blow my nose. Just one moment. Okay, thank you for bearing with me. That helped me a lot to go do that. So the web charts did come up here, and so I'm just going to scroll down here. Now I made it a little bit smaller just as far as the size on the website code, because it's not really, the website itself is responsive, but the way that they made these widgets is, it's not super responsive. When I put it on auto, for some reason, it didn't show like the whole chart. It was really weird. It only showed like this top section. And they said that's how you do it if you want it to grow and change, with the size of the screen. But it didn't kind of work. So maybe I might test it out again and try it to see if I can get it to figure out how to get it to work. So it's going to be better for you on maybe a larger screen. They do have another kind of pop-out version that you can use. So if you use it on the web, There's that version too, but I wanted something you can access at least from your cell phone or from your tablet or something. If you're out and about and you're not, you're not with your desktop computer or with your laptop, then maybe you don't want to use it on the web that way. So well, they have an app too. I forgot, they do have an app too. I think at least for Android. I know they have an app for Android. They may have it for iOS as well. So you'll have access to it. I just wanted to put, at least a widget on the website for people that don't or don't want to download the app or can't download the app. Maybe their phone is full or something. They can't download the app. You can at least go to the web page and use it. So you can click on maybe like here, it's like the Euro US or whatever, or there's a watch list here. So if I want to pull up the Euro Aussie, I can click on the Euro Aussie. It's going to change my chart for me. And, I can choose kind of what I'm on here. This is a daily chart. I can go to a 1 hour chart, maybe a 30-minute chart like we typically use. Here, there's a couple of different things here that I can use. Like this is EMA, right? So I can change this EMA by clicking on this this figure here. The length of the EMAs are 720, right? Oops. We go kill that here. It's not 9,000, it's 720. Okay, there we go. We can go here to style. We can change the style. I think we use like a pink color for our EMA. So I'll go ahead and select that. And then we'll go back and we'll hit OK. And there we go. And there's our 720 EMA, right? Kind of like we always have. So it's very easy to see whether the rate is currently above or below that EMA, right? So they have more, you can add more trend lines or moving averages here. There's a ton of different indicators that you can add there as well. MACDs, MA crosses, moving average exponentials, right? So you can add another moving average exponential, and then you can make it something else, right? So I can take this one and I can change this to my 50, right? And typically my 50 is in blue, so it should be fine. So let's do this here. Okay, great. Same as the close. It's already blue. I can leave it like that. And there you go. There's my 50 EMA. So anytime we can set up an alert when anytime this crosses one or the other, we can set up alerts for that in settings for it. So it's actually pretty good. It's a decent software. This actually, the way that we have this set up, it is based on O&A's pricing as well. So a lot of us are using O&A as our broker. So they're kind of tied in with this website as well. There's several brokers that are tied in. So they're tied into it, and you can do lots of things on here. You don't have to use just like this watch list for Forex. If you want to put in some other stock symbols and things like that, you can do that as well. Here, let's try one. Let's see. Let's put in, let's see, AMZN for Amazon. And you see there's all the Amazon come up, right? So there's for on the New York, on the NASDAQ, I'm sorry. On the NASDAQ, we can choose this one. And there you go, right? So, we may not have the same strategy, so we might have to change our moving averages and things like that. We could change it, but we can even look at stocks here, which is very, very cool. You've got line tools, you've got all types of things over here, that you can use. So it's a good charting software. I think it's a great charting software that we can use here. So I have no problem with putting it on the website, making it available for us to use. I'm gonna have to figure out whether I can make it larger or not, or what can happen here. So this one says it fits the data to the screen. Okay, great. So you can change it, or you can move the scale to the left. Lots of things. There's lots and lots and lots of features here. So it's a very, very good software. I don't, just using it, I haven't had any trouble. It's got volume down here, all types of things that you can add to it and kind of adjust it. It has screenshots that you can take. You can take like a snapshot of it as well. And depending on mobile, whether it's mobile or your desktop, it's going to be a little bit different, of course, I'm sure. But it's okay, you can definitely make a certain area larger, that type of thing. It's very good. It's very good software. We've got candles. We've got you know, all types of different styles that you can use. You can use hollow candles if you want. You know, let's use this and see. You can see what that looks like. There we go. Certain candles are hollow, that type of thing. So very cool. Haikarashi, if you're into that, they've got that as well. There are lots of ways that you can utilize this software. So I know, you know, this is Trading the Tech show. So this technically is technical trading. So I just wanted to kind of show you a little bit of what, you know, you can do here with this particular software and why it's on the website and why I think that it's good, right? There's other information here that you can access about the pair itself and what it's doing on the day, what the performance is like on the month, what the performance is like on the week, 3 months out, 6 months out, year to date, 1 year. Is it up or down? Here's the technicals, like the ratings I was talking about. What's the rating on it? Is it a sell rating, a buy rating, a strong buy, strong sell? That type of thing. All of that's available to you. That information's there. So, you know, it's a wealth of information. I think it's a great tool that we can continue to use here. So that's why, you know, I've added it. But go there, play around with it. If I've got to make it a little bit larger, I'll try to do that. You know, but get used to it. If you like it, it's good. Oh, here's another tool that I found here. Don't know exactly how to set it up just yet, but I like this. I've always kind of liked this this tool that they've got here. I don't even know how to use it just yet, but let's say we go from here and we take this and we say, okay, if we trade down to this target level and we get in here, but we're trading down to this target level, it's giving us the, you know, it gives us the information about, okay, how far our stop is. It gives us how many pips we expect to get, what the risk reward ratio is there, gives us what the target is, how many pips. Very, very cool, you know, software, you know, so it can give us more information if we need it. So let's see, let's move this up to like maybe my 720. So this is where we kind of got in. We're going to short right around here. So here's basically how big my stop is versus, you know, how much potential there might be in that particular trade. And then, you know, we see what happens from there. So very good, very cool software. It's very, very cool software. You know, I recommend, you know, checking it out and maybe using it if you're, you know, if you're not exactly new to the Forex, this might be a software that's good for you because it's a little more advanced, you know, even above and beyond the MT4. There's nothing wrong with that. There's definitely nothing wrong with having, you know, that different software packages that you can use as well to do your analysis. We can do the same analysis, what I'm teaching on my platform, or the not my platform, but the MT4 platform. I use that because typically that's where we're trading the that's where we're actually trading the pairs for most of our auto traders and things like that. So I just use MT4 because it's already set up and it's already ready to go. But you know, this is another way of looking at charts, maybe even on a different time frame, just checking it out. That's what I'm going to use it for. I'm going to use it for my daily time frame. So I want to see where we are, what's the trend on the daily time frame versus what's the trend on my 30-minute time frame. Only use those two charts and use my daily as kind of a filter, the same way I use my 720. So you know, what the direction is on this on the daily is going to help me kind of narrow down what else might be a perfect opportunity for me to trade. I don't want a lot of these. I just really wanted one other long-term chart to give me an idea of direction. That's all I really need. So, you know, I think it's a really great, I think it's a great software idea that you can use, you know, and a great way to be involved in the market, right? So All right, so let's go over here. I'm going to jump over to my MT4 now, and then we're going to go through our charts like we normally do. And then we're going to see what it is that, that presents itself as an opportunity for us. Now, we've got some different movement that's kind of occurred here today. The Aussie kind of fell off a cliff last night, and so did the pound. So we're going to look at all of that tonight. So we can see this Aussie fell down over yesterday, starting from December 3rd, but on yesterday's or Friday's trading, it fell down below the 720. It even fell down even more going into the morning, but then it recovered a lot of this move. So even if we put on our Fibonacci, let's see, I'm going to do this. I haven't done Fibos in a while. So I'm going to grab my Fibonacci retracement tool, grab it from this high down here to this low. And look what we did, right? So typically on the Fibonacci retracement, what do we look at? We go from high to low. Then we have our entry at our 23.6. So we would have gotten in here at the 23.6. Our second entry would be the 38.2. Our first exit or break even point would be our 50. And so we had a 50% retracement. I just kind of eyeballed it, I think, this afternoon. I was like, we're getting at least a 50% retracement. But you see what happened? It went right up here to this 720, and it hit the 720 and turned right back around and fell down. Now, it did touch just a little bit above our 200 as well, right? So since all the moving averages were below the 720, we'd have been shorting on either the 100 or on this 50. So as this got above here, we'd have said, okay, here, I'm gonna trade here in this area, right around this 95.20 area, or I'm gonna trade here right around the 95.04 area, just depending on how conservative you're being. Either way, we would have been profitable on that short trade. So, the Fibo is interesting because it pulled back, and we could play this two ways. We could play this back into the trend with the Fibo. That's kind of a contrarian thing because it's going back against the trend. So that was one trading opportunity. The next trading opportunity would have been the short back into the trend. So that's two opportunities for us, right? So we're going to be watching this too. So this kind of didn't roll over the way that I like to see it roll over. So kind of was kind of sharp in this movement back to the top here, and then it fell back down pretty sharply. So we're going to see if this comes down here and test this zero area. If it does and it can't break it, then maybe that might be the signal that we're going to head off to the upside. So that could kind of be breakout bounce, but it didn't roll over kind of the way that I like to see it, and it did retrace almost like 50%. When typically the rollovers that I look for are probably not going to be a 50% retracement. So I'll have to think about that and just kind of maybe incorporate it and use it a little bit just to get an idea. But that's just another way. That's something that you can always use, like the Fibonacci's as well. I haven't forgot about that strategy. We used to do that a lot in the beginning of our shows here. So I started with that. Then I switched over to this trend strategy so that you can see something different. And then introduce the catapult as well. And then some other things. So I'll just keep introducing some small things so that you have all of these tools that you can use. You'll get used to that. Now, let's go here to the Aussie yen. We'll take a look here, see what happened. We can see that we're well above our 720, so we're buyers, we're bullish. We see that we got a nice pullback down here below our 200. So we could have bought on this 200 here. As this price came down, we could have bought or just improved our area somewhere in this area here, 77.16 or so. And then we could have bought either there or maybe on this 100 or 200, which kind of converged right around this 77.24 area. Either one of those trades would have been profitable, and it wouldn't have taken all that long. Within a couple of hours, boom, we shot right up, hit our entry point for the 200. Half an hour later, we had blown through both the 100 and the 50, so we probably would have been placed into trade there. And then and 1 hour later, we're definitely profitable. We've got 2 green candles that followed right up. Actually, 4 green candles eventually that followed up. And so we would have had a profitable trade there. So like I say, this is very consistent. It's very reliable, very consistent. Previous to that, on the 4th, we got another move down below the 200. We could have bought on the 50 or the 100 here, the 100 in yellow, the 50 in blue. We could have bought there, and within a couple of hours, we've got a profitable trade. Here, we had the same thing, right? We dropped down below our 200 again, and now we could have dropped our order on this 200 or on the 50 and the 100. If we dropped it on the 200, we'd be slightly profitable. The 50, we'd be a slightly negative right now, but judging by the typical movement, and we're above the 720, we should get movement off to the upside. We've got higher lows going as well. So we'll see if that works out. We're a little bit flat across the top here. So we'll see if we'll go back and test that area to try to break it, or if we come up shy of that, we can still move our stop loss up for a profit stop and lock in our pips. You know, that's why it's important, because when we're getting this volatility, I told you, earlier, we're very, very volatile in the market today. So we're getting this movement. This was a huge retracement, actually. Let's go ahead and put the Fibonacci. This is like 100% retracement here. We go from this peak here down to this low. It retraced almost 100%. So from this move to here, we would have got in on our 23, got in on our 38. Our 50 was our first target. Our 61.8% line was our second target, or our, a place where we want to move our stop again. We want to move our profit stop loss again. And it went almost to 100% without almost even stopping. So we could have been just moving our profit stop up. Right. So that's another, that was another opportunity as well. Let's go ahead and pull the Fibbo off that. I don't like the Fibbos sticking on my chart because it just jumbles it up a little bit. So I'll take them off as I see them and use them tonight. Anyway, so Aussie New Zealand, we actually traded above our 720. We came down here and tested it as well. And then we bounced from it, right? And now we're testing it. It's showing up like it wants to be a support. It's definitely showing support level there. The only thing we're waiting on right now is our 200 to jump over the 720. The 100 followed suit. We've got all of our moving averages trying to set up trend. We don't exactly have it to the upside yet, but we're waiting for it to set up. And if this move continues, then our 200 should jump over. This is in development. This is something that it's not quite there yet, but it is developing. We need to continue to watch that as the direction for the week sets up. Aussie US, kind of like what we saw earlier in the Aussie CAD, maybe the Aussie Yen. We did get this move way down here, just kind of fell off a cliff. We had a nice trend going on to the upside, and then it fell down here below the 200 EMA. Still above the 720, so we're buyers, right? So as this fell down between the 200, we drop our order on the 200 and we wait, right? And this retraced more than 100%, right? So if we draw from this peak here to this low, we actually got a retracement more than 100% at the top here. But we had our entry on the 23, we had our entry on the 38, it eclipsed the 50, eclipsed the 61.8. We could be moving up our profit stop then, locking in our pips. And as it kept on going here, look at the green candles. 1, 2, 3, 4, 5, right in a row, green candles right in a row. And then it even jumped over the 100. Once we see it hit that 100, we definitely want to either move our stop right up there. Once it hits that 100, you definitely want to move your stop kind of real close. If it's going to keep going, it's going to keep going. If not, it might retrace. Might get a little bit tired. You might want to go ahead and just take that, take that trade off the table. But that was one way we could have traded that. Let me go ahead and take that off my objects list here. Delete. Sometimes they hang around and then they get stuck on the chart, and every time you bring up the chart, it's going to be some old Fibbo is going to be there, and you have to figure out how to delete it as things grow on your charts. It's not good. So that's why I'm deleting them now. So I learned that. There's a couple charts like that I have that pop up like that with Fibbos on it already, and I have to go delete them. So anytime you have objects like that, you don't want to really keep them on the charts like that if you're not using them, because you don't want them to get stuck. But right now, where we are here as far as the trend strategy is we did trade below the 200, so we could have dropped our order on the 200. or on the 50 or the 100, we would have been profitable. We got another drop past the 50 and the 100. So we could have dropped an order here to buy at this level as well. So somewhere right around the 74.21 area is right where our 50's at. We could have placed an order to buy there. And right now we'd be looking to enter that trade. Or we may have entered it already on this previous candle, but now, we've kind of got some green candles showing up here. We just need to really be patient. And as it goes profitable, we drop in our profit stop loss so that we don't lose our profits. We don't have to worry about it anymore. You just let it run. If it goes back to your stop, fine. If not, and it keeps going up, then eventually when it's up high enough, or a certain number of pips, you can actually drop in your profit stop a little bit higher and just kind of follow the price on up. Not too closely or not too far away, but follow it on up. That way you're locking in more pips. But you've already put the profit stop. So even if you went to work or something, you're not going to be home for 8 hours. You don't have to worry about the trade anymore. You don't have to think about it. It's profitable. You just locked it in. And, it's just a matter of where it is when you get home. Either it took you out at the stop loss and gave you the profit, or it's still running and maybe giving you more profit than what you had when you left. So, that's the opportunity. It should be a win-win. As far as the CAD yen, you can see that we're above our 720 here. We've got a pullback right now going, well, we had a pullback going on now, a little bit past the 100, past the 50 down to the 100. It actually touched the 100 here early in the trading day today. We could have dropped our order to buy on this 50 at that time, right around this 81 to 225 area. And we would have a profitable trade right now. Slightly profitable, but that's great. That's perfectly fine. That's what we're looking for. Swiss yen, kind of the same thing. We're trading above our 720. We got a pullback today down below our 100. And so we could actually buy here on our 50, place our pending order to buy on our 50. You right click, go to trading, buy stop. If one-click trading set up, it's a very, very quick way to set up your trade instead of going over here, bringing up the dialog box, and then having to type things in or anything like that. Type in a stop loss, or you can sell or buy. We don't really typically trade at the market, so we'd have to change the market execution over to a pending order, and then we'd have to type the price in. It's a lot of work when you could just right click on the chart, put your cursor kind of where you want to be, right click, go to trading and go to buy stop, push the button, and your order's placed. Right? So, it's just a little bit easier to do it that way. We're typically not setting stops and limits right away either. So, we don't need all those extra boxes and to fill in all that extra information. Now, the Euro Aussie, we're trading above our 720, right? And so you see that we had this pullback past the 200 here. We had this one that actually touched the 720. We've got more, another pullback now that kind of developed past the 200. So we can be dropping our order here to buy on the 50 or either there or on the 100 up here at a 163.31 area. We could buy there as well. If the market, or the rate decides, what, I'm not going up past the 200, and I'm not going to go past the other moving averages, and it continues on down, we just can delete that pending order when it's no longer needed. Right? So, we could end up just deleting the order out. We don't need it anymore if something else sets up. But right now, we're trading to the upside. So, we'd still be bullish here because we're rated and everything else. All the moving averages are above the 720. So we'd still be bullish anyway. So we don't have to delete it. We can kind of leave it there. And then, as the moving average changes, as the new candles develop, as long as the situation really doesn't change, we can just be changing the rate, hopefully improving the price that we get in at, that we would get in at. We just have our pending order follow the moving average, right? So, and then, later on, if something else happens, then we get out. If it falls below the 720 or something, the moving averages start jumping over the 720, we just delete our order. We don't take that ride down. Here's the Euro CAD. We can see that we're trading now the Euro CAD rate below our 720, right? So we had this huge fall here below the 720. We did retrace just a portion of that move down. If I'm drawing a Fibonacci, I can draw it from one of two places. I can draw it from here, or I can draw it from here. But since we've had this, with this big move in the middle, I probably would draw it from here down to here. That's my low. And then looking at it, we did get our entry on the 23. We got our entry here on the 38.2, but it didn't quite meet our 50, right? It didn't quite hit the 50. This is why I like to break even a little bit early. Because as it hits each level, maybe we start to break it even if it's a few pips, 3-4 pips, I'm still going to break it even just in case it comes back down like it did here, right? So that way, if it comes back down against me, I got a few pips out of it. I don't have to worry about it. From the 23, we had a decent amount of pips. It was all the way down here. This 23 was sitting way down here below 155, maybe 155.20 or so, 23 or so. And then it was 125.47 when we hit the 38. So there was probably a good 20, there's at least a good 20 to 25 pips in the run from the 23 back through the 38. 20, 25 pips is not shabby, and even if you dropped in your stop loss and you got 10 of them, 15 of them, you still took home pips. You didn't have a loss, right? And you're not confused about what's happening here. Now, it's a little bit different on the Fibonacci because now our 720, can be used as a filter, or you can say, okay, I'm not going to pay attention to the 720. But if you're going to be more sophisticated, you can say, okay, well, I want to pay attention to the 720 and apply the same philosophy to it as far as buying and selling, whether I'm above or below. So those are things that you can add as you get a little more complex in your reasoning on how you're trading. You can add those filters to it. So you can use that 720 as a filter, even with the Fibonacci strategy. Say, hey, listen, we're trading below the 720 right now, right below the 720. My moving averages are starting to jump below the 720. So even if it does go up, I'm not going to play that retracement. I'll play a different retracement. I'll play a retracement in the direction of trend, or not do anything at all because it's so close to the 720. This one's a hard one because we are so close to the 720. If we're going to buy on the moving averages here, we'd want it to actually maybe hit. We always talk about using like the most conservative moving average when it's so close to the 720. So our order to buy would have been up here on our 200. We could have gone on our 100, but this is why it gets a little tricky, because if we bought here, even though it committed its move above the 720, it actually still fell down. It's really kind of too close to my 720 to be interested in buying. The moving averages were really too close, and my 50 had already jumped over below. I don't know about that. I'd have to really see how that works out. Now, it may still work out that it moves back up to the upside here, so we'd have to be patient. But typically when the rate jumps back below the 720, that's kind of like my stop loss. I'm going to get out because now it's kind of telling us that, hey, I'm not going in the upward direction. Can change its mind, but it's just one of those situations where it's kind of in a almost a gray area for us, where we're taking on more risk than is necessary, because we have other trades that it's not necessary for us to trade here until this really sets up. That's why I like to wait until it really actually sets up. And we know for sure, like, so I've got 3 moving averages below the 720. I've got 2 above, and my long terms are above. So that tells me that there's a possibility it could change. It could go back. So I don't want to really make either decision here. But if I'm trading a different strategy, if I'm trading the Fibonacci strategy, then I've got the opportunity with the Fibonacci strategy to make some pips. I've got breakout bounce opportunity as well. What did we have here? We created a low. We ended around, like I say, we all, with this curve that we have at the top, and then we come back down the test. We didn't really break the low, and we really didn't quite break the bodies of these candles here, because all this down here is wicks, which is still important, but I really look kind of at the bodies. The bodies of the candles are here. We didn't break that here. We should trade off to the upside. So we'd come create a low, we bounce up, curve around, come back down to create another low, but it doesn't break the previous one. We should trade off to the upside. So that's a third way we could have played this particular pair. just things that we can look at. And right now, this one didn't roll over. It's kind of like a V-shaped, upside down V. I don't know what else to call it at this point. Kind of was a V shape. It didn't roll over like this rolls over like a U. This rolls over like a V, right? But it came down and it's not quite breaking this level. So that's telling me that if, there may be the possibility that this trades off to the upside if it doesn't break this particular level either. That may actually trigger it to trade off to the other side, to the upside. So we'll have to wait and see, what happens there. But we had a couple of different ways. We have like 2 or 3 different ways we could actually play this particular chart. All right, we're going to move on to the Euro Swiss. We see the Euro Swiss actually fell down below our 720. And then as of yesterday, it kept on going, right? So it kept on going down. We've got all our moving averages are starting to set up in order to the downside here. So we may actually have a real change in direction here. We're just waiting on the 200 to jump over the 720, right? So we've got our 100 here, starting to get some distance between our 720 and the 100. The angle is kind of nice here. So we'd be looking to be maybe kind of bullish here. I mean, not bullish, but bearish at this point in time because we're sellers because we're below our 720, right? So when we start to pull back here, we're going to see if we pull back past the 50, then maybe up here towards this 100. If it got as high as the 100, I may drop a short order here on the 50. Now, if it wants to continue on up and like break this cycle that we're in or break this particular range, or trend that we're in, and it wants to go up, then fine. It doesn't put me in the order. I want to give enough space where when I place this pending order for the 50, the rate has to kind of commit to coming back to this level before I enter the trade. So we may see some more downside a little bit here. We'll have to see because our 200 hasn't quite jumped over yet. So we don't have a mature trend just yet, but it's trying to set up. So that's something we put in our journal, say, okay, this is setting up for us here. So we'll see, we'll monitor that, see what happens. On the Euro Pound, you see that we are trading above our 720. We had a pullback here right now past the 100. So we could drop our order here on the 50 and have our moving average kind of dictate, where we get in at. And so we'd be very slightly profitable right now. But the expectation is that we'll go in the preferred direction, which is to the upside because everything is above our 720. As far as the Euro Yen, we're trading above the 720 once again. We've got a pullback right now down below our 200 here in orange, right? We've got a pullback there, so we can buy on the 50 or on this 100. We want to be a little more conservative, buy on the 100 at 126.15. The 50 is at 126.11. So even if it's 4 pips, that's still giving us a little bit more room for the rate to really commit to moving forward to the upside. So, we can drop our order there and just be patient with it. And it should continue to move in the preferred direction to the upside. If not, and it moves to the downside, then we didn't get involved in the order, we can delete it, right? Euro New Zealand, kind of the same thing. We're trading above our 720. All the moving averages are above the 720. They're not quite in order here, but we did pull down our rate almost to our 200 here. So we could have bought on our 50 or our 100. We could have placed an order on the 50 up here or on the yellow 100 here. And right now we'd be slightly profitable on the 100 moving average trade. And then on the 50, we'd probably just have gotten in and be maybe slightly not profitable just yet. But the idea is that it should continue to the upside because that's the direction that, the moving averages are telling us we're going in. It's a little close to my 720, I know. So I have to be careful here. I'd be careful. I'd be breaking that even with a few pips on board, I'd break it even and then just let it run. If it decides to turn against us and hits a stop loss, oh, well, we got a few pips out of it. We're done, right? Here's our Euro US. We're trading above our 720 right now. So we had this move down below the 200 earlier. Right now, we're pulling back to the 200. So our 50 and our 100 are wide open here for us to place a buy order, right? At what's the 100 here is at 121.21. So that would be our buy order. And if we get a movement back towards that direction, we should get a push to the upside. definitely look to break it even a little bit faster because we're getting lower highs. We kind of got a flat high here, and then we're getting a lower high from here to here. You know, one could argue it's flat because of the wick. You could say, but it's still a lower high if you use the wick. You know, I don't typically like to use the wick because, you know, I like to use the body of the candle more than the wick. Because the wick could slide over, but the body of the candle is pretty much where it's telling us where we closed and where we opened. So, you know, we can still see either way, we've got a lower high. So here, if I'm buying here, I'm going to keep that in mind, and I want to break that even as it approaches this trend line. Okay. So that's a little more advanced trend lines. We don't do a lot of trend lines here on the show just yet, because I want people, you know, who are looking at the shows to, I don't want to give too much, you know, because there's a lot of things that you can add and a lot of things you can do. I want to give you the simplicity right now is like just learning how to identify the trend, what direction you should trade in, and then what the levels are that you should trade on, and then how to manage it from there. So, you know, so that it's very, very simple for you. As far as the pound Aussie, we're trading here below our 720, right? All of our moving averages are to the downside as well. So we're bearish on this, meaning we're sellers. We did pull back past our 50 and then slightly past our 100. So we would have dropped our order here on our 50 to sell. It's pretty flat here. So it would have been pretty much in the same area right around this 1.80 number. And we'd be profitable right here now at this moment, still with some red candles developing. Break that even right around here, maybe right around this 21 or a little lower than the 21, just to kind of keep our profits a little bit, and just let it run, you know, and adjust it once in a while. Pound CAD, kind of the same thing, trading below our 720, got some nice separation going on here. We did trade back to our 100 here, so we could have dropped our order to sell on our 50 here, right around this 170, 113 area. We'd have a profitable trade right now, right around the 170.80 area. So there's some decent pips there too, right? So we break that even, add some pips to the break even, and then we let it run. Pound Swiss, same thing, 720 up top. We jumped up here towards the 100. We could drop our order here on this 50, which is kind of flat at the 119.02 area or so. We'd have a profitable trade right now, right about 8 to 10 pips. Pound yen, we're trading, it's a little bit different here. We're trading right on top of our 720 right now. We'd have to be very careful there. Our three long-term moving averages, the 50, 100, and the 200, are still above the 720. So if I'm doing anything, I'm going to drop an order probably on this conservative 200. Make the rate really commit towards, you know, moving that direction before I get involved, if I'm placing a trade. But I've got so many other ones right now, you know, that typically you don't have to, you know, you don't have to really force that trade if you don't, you know, if you don't want. But you can place it, you know, if you've got the margin and you're fine, your account's doing fine and sitting in a good position and you want to take it, you can take that trade. You know, you just have to manage it like anything else. Pound US, we're trading above the 720, right? We did drop below the 720 quite a bit when we had this, you know, fell off a cliff here. Let's check out the Fibonacci on this. We're going to go from this high down to this low. Look what we did. Bounce through the 23, through the 38. We hit our first target where we either get out or we break even. We pass through that almost to our 61.8 and before we drop back off. So that was a good opportunity as well for the Fibonacci trade. All right, let's go ahead and delete that. And now, you know, rate is back above the 720. So it's in our mind that, yay, we did, you know, we did drop below our 720 a little bit there. And our moving averages are still all above the 720. So our return to the upside probably can happen. So what I would do is be conservative. Since we're so close to the 720, I'd use the furthest moving average, which is my 200 for my buy area up in this 133.87. area, because if this comes down here and this serves as a floor, then it gives us some room for the rate to really commit towards moving back towards the upside. If not, and it wants to break down below the 720, that's fine. We delete the order and we keep going. New Zealand CAD, we dropped down quite a bit here. We've got this big move down here past our 720. If we put the Fibonacci on it, we didn't get quite that big a move off it. I'd be surprised if we even got to the 50%. I don't think we did. We didn't even get to the 38.2. We passed our 23.6 here, but we would have had to break it even pretty quickly and make sure that we got a couple of pips out of it before it, before it destroyed us there, before it destroyed our trade. So there's no rule about how fast you can break even, or you should or you shouldn't, anything like that. Typically, you want to break that trade even. And remember, we're now rate is below the 720. So there's the opportunity for it to continue on down, or this move to exhaust before it hits that 720 and it want to go down. So we want to be breaking. If we're out of trend, we want to break even quickly. I guess that's the rule that we should probably set for ourselves. If we're trading against trend, we break even quickly. Break even plus some pips, right? Break even is when you're placing your order to get out, at least at the same level where you got in, so that you get at least 0 pips loss, 0 pips gain. If you add some pips to it, then, if you go break even plus 4, break even plus 2, that allows you to get at least those 2 pips. You're going to put at least those couple of pips in your pocket. And then if it gives you more, you keep moving your stop loss up and it'll give you more pips. But if not, and it comes back, then fine. You just don't get involved with the trade. Now, we did have kind of a bit of a breakout bounce here. We created a low. We came up here, not very high. We kind of rolled around, but then we came around to check the low again, and it didn't break, and it bounced to the upside, right? So there's the opportunity there as well. It's very, very small bounce though here. So I would have been a little skeptical there, but it did, kind of roll over and then drop down and not break. So that told me that it might go off to the upside, right? And then as it pulls past our 50, as it pulled past my 100, I could be shorting on this one, on this 50 down here. I could have shorted on the 50. That would have been a profitable trade for me. The only thing I really be waiting on right now is my 200 to kind of jump over. So if I didn't want to do that because my 200 didn't jump over, I could use that as a filter. Hey, I'm not ready to jump on that trade yet. I don't want to go here because my 200 is still above my 720. That's the kind of the thought process that you can have. There's no, we won't create a rule for you about it. Now you guys, you've seen this, trading strategy enough where you can start being a little bit flexible in the way you think about it. And so maybe I'll start introducing a little more flexibility into it, so that it's not so hardcore and rigid, but at the same time, it's got the foundation is there for you. I don't want to confuse you, at all. I want you, if you don't want to add these other thoughts into it, you don't have to, so it's very, very simpler. But if you want to start thinking about, okay, even if my 200 is above my 720, if all the other moving averages are below and we've got trend to the downside because the order is in the correct order here, I'm interested in shorting there. Can be, the chances are you're probably going to get some pips out of it. And if you break even early, fine, you're going to get some pips out of it. New Zealand Swiss, we're trading below our 720 here, right? Our 200 finally jumped below. So now we've got full trend to the downside, a full mature trend. We are kind of trading off to the right here. We've got, pretty much a channel off to the right. It started to widen out just a little bit here. We started to get some volatility. So maybe traders are ready, they look like they're ready to move a little bit here. And we did actually get this pullback towards the 100. We could have dropped our order to short here on the 50. Right? So as we did that, that's kind of was sitting right around the 62.71 mark. We did drop down here into the 62.50s or so. So there was pips in there for us. We'd still be profitable pretty much right now, not by a whole lot, but we'd be profitable. And the preferred direction now, since our 200's below, is to the downside. So our expectation is that there's going to be more momentum to the downside than to the upside. And so that's how we would look at that particular trade and, be confident about our sell trade here on this 50. As far as New Zealand yen, typically on the New Zealand's, we're above our 720. So the last couple maybe not, but now that's changing a little bit. But we've been above our 720 on a lot of the New Zealand. So New Zealand yen is still above, right? So we're going to be thinking bullish to buy, right? We've got our moving averages now. They're starting to get in order to the downside. So there's going to be some downside push here. There's going to be some towards that 720, but doesn't change the fact that everything is above the 720. Everything's there. So we could buy here, pretty aggressively on this 21 or this 50 right now, or we can be more conservative and use the 100 or the 200 here. And that way the rate really has to commit to kind of go back before we enter the trade. For this one, since we're so far away from the 720, I'd use pretty much any one of those at this point. I don't have any problem with that because we're well above our 720. At some point, we're probably going to come back and touch this area. If we don't trade below the 720, we should move back into an upward type move. Might take some time, but we should. As it drops down, even if it's dropping down, these moving averages will be dropping down too. And so you can take your pending order and kind of move it along with that pending order. Eventually it's going to exhaust itself and want to go back the other way. And you'll just be in position. Now, as far as the New Zealand US, we're still trading above the 720, right? Here's our 720 here. And so we got this nice move down below the 200. We've got a huge move down here below the 200, but we retraced a lot of it too. Let's put that on the Fibonacci, see what happens if we use this peak up here and this low. We would have got in on our 23.6 here, right? And then we would have hit our 38.2 and we would have hit our first target and almost the second target. We would have been able to break even our pips here and taken a bunch of pips off the table. We're down here around the 70.28 mark or so. And then up here to the 50s, around 70, 55 or so, if it's 70, 54 or so. So there's a number of pips there for us as well. Probably good 20 to, 30 pips there for us that we could have gotten out of that particular trade based on the Fibonacci. If we didn't play the Fibonacci, if we didn't play it that way, then we could have played the buy as we broke down below the 200. We could have placed a buy on our 100 or our 200 and just kind of moved it on down here until we eventually hit either here or here, until the rate eventually hit it. And then we would have had a profitable trade to the upside. Make sure you break even. Oh, excuse me, I had to sneeze again. We just make sure that we break even and, and let the trade ride. It came back down. It would have taken us out at our stop, but we would have had some pips out of it. And now we've got free margin to do it again. All right, so let's go ahead and check out the US dollar CAD. US dollar CAD, we did get some movement to the upside today, but then it kind of reverted back to trend. Our trend is to the downside. The dollar, of course, is shown weakness. And so our trend being to the downside because we're below our 720. We did get a pullback here almost to the 100. And so we could have dropped our order to short here on the 100 around this 128.08 area. We still would have been profitable because we're sitting down about 127.93 or so. As far as the US dollar Swiss, we are trading below our 720, well below the 720. We did get this push up here towards the 200. We could have dropped our order here on the 100 or on this 50 to short, and we would have had a nice profitable trade going, and then we probably would have been taken out on our stop loss, our break even already, because we had this nice move to the downside here. As far as the US dollar yen, we're trading below our 720 here. So the moving averages are pretty much in order to the downside. So we've got kind of a mature trend to the downside here. Our expectation is that it's going to continue to the downside. And so, as this traded back to the 720, we could have shorted on this this 200. Remember, all the moving averages were still below the 720, right? So we would have shorted from there, right? And we would have had a positive trade going on. So that's our pairs. That's our analysis for tonight for the pairs. Hopefully, I didn't confuse you with adding some new things in, but I'll maybe start to add some of those new ideas in here for you so that you can kind of see what's going on in the markets and have some, some more confidence on how to place the trades and becoming good traders. We showed you a number of trades today that would have been profitable for you. So, the big thing is that we just stay consistent. We just continue to hit our mark every single time. We know what our strategy is. You have to kind of decide what you want to do. Now, I don't want you doing everything until you get, maybe a year or two under your belt of just practicing and placing your trade, or when you start to feel comfortable 6 months in, 8 months in, and then you add another little piece, right? Say, okay, this is what my other filter is going to be, or this is a pattern that I've noticed as I've been trading. I'm going to add this little piece in. I'm going to trade maybe the breakout bounce. I'm going to trade the Fibonacci a little bit. I'm going to trade the trend trade. So you have to kind of start somewhere, which type trade you're going to do, and then stick with that for a while. I would say at least like 6 months until you get real confident, you get real good at it. You know exactly how you do this thing. You can do it in your sleep. And then you add your next piece, and then you add your next piece. And this is how we're going to build traders. You're going to be able to do so much, even inside of a year to a year and a half, you're going to be in a great place, and you're going to be successful more than pretty much anybody who's out there. If you follow the disciplines, you just do the discipline. So it's important to do that. It's important to kind of just establish the time. It takes time. Been watching some channels today. I found an interesting channel on YouTube, and this guy is like outing all of the scammers, the gurus, and things like that online. And it's just amazing the things people get caught in, like people losing $20,000, $50,000 just buying courses from these gurus and things. And it really just, anytime I see something about that, I immediately think about iLi Academy. I'm like, we don't want to be like that. It's not necessary for us to be like that. So, and I always, I don't know, I have this identity crisis thing. And it's just like, I want to make sure like I'm not one of those people who's offering something that's not worth anything for anybody, but this is obviously worth it. Are you going to win every trade? No, obviously not. You're not going to win every single trade, but it's obviously something that's worth it because you can see, I'm showing you night after night how you can actually place these trades, how to analyze it, so I'm giving you a skill. So, I don't know what it is. I think I've always had that kind of identity crisis. Just, I don't want to be one of those people. There's so many people. One of them was, one of the shows was on Forex scammers and people saying, oh, give me, $300 and I'll make you, 3,000% in 3 days or something. And you see this all the time. I get people in my Facebook all the time. It's like, I friend them because I know what they're going to do. I see it already. I always check somebody's profile before I add them on. I kind of watch what they do for a little bit. If I don't like them, I delete them, but they inevitably, it's because the Forex ones, they're always like, you see it right in their profile. They're a Forex trader, this, that, and the other. And then, like within 5 minutes of you accepting them, they're in your inbox saying, hello, how are you today? And I know where it's going or whatever. So I just kind of play along or whatever. And I just see what it is. And then I kind of tell them what I do. I give them the website. I did it for one guy, like last week. I gave him the website. I'm like, I'm in the Forex business. This is what it is. Here's my site. And he's like, oh, well, do you want to try my strategy? And I'm like, why would I do that if I own a Forex company? What do you think? It's just, that's the most crazy thing. Like, I don't even have words for it. It's like, I'm not running a company and looking for strategies for people. How would I run a company and I don't have strategies that I'm confident about? But that tells you the level of thinking of people out there. They're really just trying to get their hands on your money. They don't even respond, and most of them are coming, there are a lot of them coming from Africa and some other places like that. It's a huge level of scam. that's coming out of those areas. I saw one on the show today where the guy, they showed the text messages or whatever, like the guy saying he's going to give him this huge percentage or whatever. And the guy asked him, what brokerage do you use? And the guy was like, what is brokerage? That was his response. He's like, what is brokerage? What do you mean you don't know what a brokerage is? How do you not know what a brokerage is in Forex? You have obviously have a Forex broker if you're trading Forex. So why don't you even know the terminology, but you're asking people for money? So this is what we're up against. And, someone like me, it's going to be hard to compete because I'm not, you know, I haven't rented a Lamborghini and I haven't rented this house that's not mine and purported it to be mine and living this lifestyle and drawing people in that way. I want to draw people in by word of mouth. When I do a good job, people will tell other people about it. I learned this when I had my recording studio. It's like I had so much word of mouth business, it just became my favorite form of business. I never really had to advertise anymore. I didn't have to I didn't have social media back then to put it on. I think maybe we had Facebook, maybe back then. I don't remember. It's been so long. It was almost like MySpace or something, probably was the big thing back then. And then it was kind of transitioning out to Facebook or whatever, but I wasn't big on it. eBay was like the big thing back then, stuff like that. LimeWire and stuff like that was big. But there was not, this, getting in somebody's message box and giving them information. It wasn't like that. I just needed to produce good work, and they brought their friends. So eventually I ended up with like 150 regular clients, like people that I'm going to see within a couple of months. Everybody's coming back. Everybody's, coming back with their crews and different people. They're introducing me to new people, and I'm getting this work. And, we're doing production work. We had one room, and I was trying to open a second room as well, because sometimes I've got people in the booth, taking a little bit longer or whatever. And I could be getting money in the second room. It was growing like that. I learned from that, and it was all word of mouth. And the nice thing I learned about is people don't talk down about you or bad about you when they've had a good experience with you. If they're talking good and people are showing up, that's going to be another loyal customer they're bringing, because that person's they don't really want to mess it up for their friend either. They can't go there messing up because they know they got referred in. And, in that kind of business, you want to kind of somewhat be private, because you don't want people coming stealing your equipment and all that stuff either. So you can't just be super public and putting your address out there. You got to be brought in by somebody. And so I grew my business that way. And I want to grow the Forex business the same way, just with word of mouth advertising. It may take longer, but I'm not the kind of person out here just trying to get as much money as I can from everybody and then disappear, or leave people with a bad taste in their mouth. That's not what I want to do. So I'm gonna get off that soapbox. I know I've been on here for a little while already. Check out definitely the new pages on the website with the new charting and the new rates and all that type of thing. And we'll talk to you in the morning on the Daily Market Overview Show. All right. All right. Have a good night of trading. Have a good night's sleep if you're going to sleep. And we'll talk to you soon. Have a great one. Bye-bye.